Good morning, everybody. Happy Monday. Today is Monday, April 10th. Hopefully, y'all had a good 3-day weekend. Happy Easter and Good Friday to everybody who celebrates. SPY is currently down about 0.5%, a little bit more actually, from 409.19 at close on Thursday to currently 406.65. Couple reasons this might be. My thinking is that we had some news about China doing some drills over Taiwan, and then they made a statement that they stand ready at all times to defeat any form of Taiwan independence and foreign interference attempts. And also, we had the Friday unemployment rate, which ended up coming in at 3.5%, which was lower than what was expected at 3.6% and 3.6% last month. Let me send the alert through to bring everybody on in here. Live stream starting now. Everyone. All right. And second reason, like I was saying, unemployment rate came in lower than expected, which meant that the odds for the Fed raising interest rates at the next meeting by 25 basis points ended up going up this morning. So if we look at the FOMC countdown tool by the CME group, this currently stands at a 71% chance that we're going to raise by 25 basis points at the May 3rd meeting. So this means that interest rates are going up. A lot of the reason as to why the stock market has gone up over the past month or so is because interest rates were dropping for a while, but now we're actually seeing the 10-year recovering from 3.287 to currently 3.393. So interest rates are definitely on the rise this morning, which is bringing down especially high-tech growth names, with QQQ down 0.9% versus SPY only down 0.6% as of right now. Good morning, Kamala. Welcome. Let me check in on the put debit spread that I opened that's expiring for today. Looks like we just went below 315 for QQQ. SPY is standing at 406.75. I had a put debit spread assuming SPY would be under 408 today. Currently up by 250. There's a good chance that we do end up taking a bounce here, but these are going for 70 apiece, which I feel like is actually finally a decent price that I'm getting out of this put. Puts have been more cheap as of lately, so I'm thinking about trying a different strategy rather than the same old debit spreads. Because if you try to do a call debit spread, like just one strike price up at the close of the day, you're paying like 55 cents, which is, the risk reward is a little bit worse than 1-to-1. But what you could do in order to bring down some of that risk and improve your risk reward is either an iron condor or an iron butterfly. And the way that I'm thinking about it, currently SPY is trading at 406. So let's say that it's 3 o'clock end of day right now, and I'm assuming that SPY is going to be bullish tomorrow for whatever reason, if there's any economic data coming out, whatever it might be. I would set the expiration date for tomorrow. I would sell a put that's at the money, right? So the 406.25. Currently we're trading at 406.25, so at the money would be 406. Then you would buy a 405, so it's kind of like a put credit spread, assuming that it's not going to go any lower. And then you would add in a call credit spread. I would say probably like 1% up. Usually we don't get more than a 1% move to the upside. Sometimes it can be like 1.25%, but it's pretty unusual. But what we would do is sell a call credit spread, assuming that it's going to be below 410. And now you're getting about a 1-to-1 risk reward ratio here too, but you're getting paid 55 cents and you're only risking 45. So instead of risking 55 to make 45, it's the opposite way around. So that does improve your odds a little bit here. But that's the best bullish trades that I could find. You could also do an iron butterfly, but with iron butterfly, you have to pick a specific price that the stock needs to be at. Good morning, Donald. Good morning, Being Human. Welcome, everybody. Happy Monday. Got some volatility going on with the VIX finally above 20 again, up 9% as of right now. 3 stocks I'm watching for earnings this week is Delta Airlines, United Health, and Citigroup. Citi and UNH are both reporting on Friday morning. Delta Airlines is Thursday in the after hours. But let's check in on this put debit spread. And then I have an iron condor assuming SPY between 400 and 410 after the CPI report. That ought to be doing pretty well too. But yeah, everything is pulling back at the moment with interest rates going up. QQQ is down 1.05%. SPY down 0.7%. And the Dow is probably down the least. Yeah, only 0.4%. So that's usually what you're going to see whenever interest rates are going up. Qs will get hit the worst, and then the Dow will be hit the least. The dollar is also on the rise a decent bit, actually, 0.8%, up from currently at 102.65 versus a close at roughly 102.08. So pretty decent rise in the dollar today, interesting enough. Likely on the back of interest rates going up. I'll be interested to see if QQQ retests that 313 level that we couldn't end up cracking on Friday. It's still $1.65 away, so it's, a decent distance to fall, but it may be in the cards if things get really shifty today. But yeah, definitely bearish to start the day. You're looking at 23 RSI for Qs. For SPY, you're looking at 42 RSI, or that's IWM actually. For SPY, you're looking at 20 RSI. And then for the Dow, you're looking at, let's see if I can pull it up. For the Dow, you're looking at 33. And then for IWM, the Russell 2000, you're looking at 43. So the Russell 2000 is actually performing the best in terms of RSI as of right now. You have that 173 level that it refused to crack below on Friday. So if we do see a pullback below 173, it might mean some trouble for the market today. We'll have to see. You have that 173 level, and then below that, the 2-day lows or the 3-day lows at 172.50. So IWM might be the one to watch today, and then obviously QQQ being down the worst. If this goes below 313, I think that could spell some trouble too. But right now, up 325 for this put debit spread. They're trading for 80 cents a piece. I'm going to let them go for right now. See what we're going to do for QQQ and IWM first. Good morning, Health is Wealth. Good morning, Ada. Let's see if there's any other news that we should be paying attention to right now. Yeah, I already know my price levels are getting hit right now. I'm not seeing any news as of right now. Not on FinTalk at least. Let me check the futures. Usually the futures is more active on the news feed than what you'll get for SPY. So if you type in /ES, you'll get more news here than you'll get for SPY. But let's see. Stocks are falling at the open of the 3-day weekend. Let's see. Oil steadies after last week's surge. Yeah, oil hasn't really moved too much as of right now. Down 0.1%, so not really much change. Treasury yields are declining as U.S.-China tensions boost demand for bonds. That's actually not true. That's a bit misleading. Yields are on the rise today. I'm not sure why it's saying that they're on the decline. Treasury yield has declined on Monday as renewed geopolitical tensions help boost demand for the bond market. Safety play, that's not the case for at least the 10-year is up right now. Let me check the 2-year and the rest of the yields, but I'm pretty sure all the yields are up. 2-year yield. It's basically flat. Up like 0.004 to 3.976, so it's below 4, which is relatively low there. But we're not seeing yields pulling back, so let's see the shorter month, the 3-month yield, the shorter end of the Treasury. That's up 0.018, so kind of misleading title they got there. Yields are definitely on the rise, not on the decline this morning. But gold is pulling back with the dollar going up today. Could present us with a good opportunity for a long position in gold, possibly. Let's see. It's trading at 185 for GLD right now, 185.33. So that's a pretty good discount compared to the highs at 188. But if you're comparing it to the past month, obviously, this is still up quite a bit. And I would probably want to be a buyer in the low 180s rather than in the high 180s, just so you can get a small discount on it. But I would think about a leaps option for GLD or really any gold ETF. I think that would do pretty well over the next like 2-3 years due to, the war escalations is going to boost the price of gold. You're going to have the recession where gold outperforms the stock market. So there's a lot of bullishness for gold in the next few years, I believe. But you are coming up on an all-time high for the price of gold. Let's see. At 194 previously, and back in 2022, March of 2022, it's 193. So you're getting close to that top where there might be some selling pressure. But IWM just went positive at 174, so we might see a U-turn for the market right here. Let's see, the Dow is still negative 0.3%, but IWM is at 174, so it ended up bouncing again at that 173 level. QQQ just went below 313 or 314 now. So it's a very mixed bag for the markets this morning, with IWM and QQQ going opposite directions as of right now. But that could mean a U-turn ahead for the Qs. All right, the 409, 408 puts haven't gained any value. Still up 270 right now. I'm really worried about IWM turning things around, so maybe we can hedge our positions with QQQ. Assuming maybe it's going to stay below or stay above that 313 mark. And let's see, towards the upside, maybe 316. Let's see how much we can get paid out of that. Turn it into an iron condor. The VIX is pulling back now at 1967. IWM is still pumping at 174.40 right now. Right now, the 313, 312 put credit spread is actually paying 26, which I feel like is a decent price on it. And then adding in the calls, assuming that it's going to stay below 316, you're getting paid a total of 45 cents credit, risking 55 per option, assuming QQQ between 313 and 316 by the end of the day. It's a pretty good trade. Probably wouldn't want to risk a lot on it just because it is non-directional. You're assuming that QQQ is going to trade flat, and if the momentum continues, this is definitely going to retest 313. But right now with IWM in the lead, it does seem like it might turn around. I'll probably just risk like 200 for it. We're coming below 314, so second guess in this trade. Let's see if we test 313 first. We might be able to wait it. Emerging markets might be good later in the year. Yeah. Could be the case with a lot of the Western world going into recession. Well, I guess the developed nations, not just the Western world, I should say. China as well. It seems like their recovery after opening after COVID, the zero COVID lockdowns, doesn't seem to be as good as expected. Any chance that SPY bounces up today? I think that you could get a bounce for SPY based on IWM recovering right now, potentially. So QQQ would be what you would probably want to watch in order to get a recovery for SPY. It's at 406.75 for SPY right now, down 0.6%. If you see QQQ either managing to stay above 314 or the 313 level, then you'll probably get a bounce for SPY. But if you can't hold that 313 level for QQQ, then I think it's just going to continue to fall. Maybe we can just do a IWM trade instead of trading another ETF, since that's the one that we're focused on right now. It's paying only 15 cents, so it's a pretty low credit. And then IWM currently trading at 174.50, basically at the morning highs, the pre-market highs. Let's see, if we look at the hourly chart, go back a little bit, you're going to get some resistance at about 175. Currently it's at 174.50, so it's already pretty close to that. But we could make an iron condor out of this, and that might be a better trade. Yeah, the credit for it is just not as good as that QQQ that I was looking at. Assuming that IWM will be between 173 and 176, you're only getting paid 27 cents in credit. If you lower the strike price on the calls, let's see. Oh, I got the wrong expiration date. There we go. If you lower the call to 175 instead of 176, you get paid 48 cents. So about a 1-to-1 on the risk reward there. And that's assuming IWM between 173 and 175 by the end of the day. So if QQQ keeps falling, that could drag IWM down. But I think it's going to be the opposite way around. I think that IWM going up is going to lead QQQ to go up. But assuming that IWM will go above 175, you're paying like 60 cents a contract. So that's very, very high right now. If we break 313 QQQ, what's your thoughts on a put debit trade? Could be a good idea. I would want to take the trade before we hit 313 though, just so you get a little bit better risk reward. Because if we come down to 313, then we tag that, you could end up just bouncing on it just like we did on Thursday, right? So I would want to take the trade now rather than later. But obviously you are taking on more risk by front running it than following it after. Let's see what a QQQ put debit spread cost right now. Assuming we go below that 313 mark, I think that if we do go below 313, it could be a pretty big trigger. It's a very important support and resistance level. It seems to gravitate towards that 313 mark quite a bit. And if you're going to pay for a 313, 314 put debit spread, it's going for 48 cents. It's about a 1-to-1 on the risk reward. And that's assuming that QQQ will drop another 60 cents, which really isn't a lot. So I would say that's a half decent trade. Definitely based on the trend, we're headed down today. I mean, if you're looking at RSI, this is at 16, it looks like. So as long as this stays below 50 RSI, obviously that's bearish. It's been staying below like 40 RSI, so it's ultra bearish. I'm hoping that we get a slip here below 313 so we can drag SPY to 405. Maybe I can close out of my iron condors before the CPI, the inflation report on Wednesday. That would be ideal to get out of that position, because I'm sure we'll probably move up or down by more than $5 after the consumer price index comes out on Wednesday. Let's see. I'm already at a profit of almost $100 for this as of right now. So we'll see. IWM is inching closer to 175 too. It's a very mixed market this morning, interesting enough. You would think with interest rates going up, that would probably place more pressure on IWM, but not the case. Let's see what the banks are up to. KRE, haven't seen this one in a while. It's trading at 43. So it's very low. It's been in that 41 to 50 range, or 41 to 45 range, ever since the SVB mess, and hasn't really been able to crack that low at 41. All right, QQQ is getting closer to 313, so let's keep watching that front. 313.32. So again, this is a level to watch for right here. If we do get a bounce similar to what we saw Friday, That was pretty violent rally after that. It's nice that these are already up by 96. Ideally, I want it to be at 405 and as close to the expiration as possible. That's the ideal scenario for an iron condor. So with the expiration date on 412, I'd want it at 405 at 3:59 p.m. on 412 in order to get the most amount of value out of that trade. Right now it's at 406.25 and it still has 2 days till expiration, so not quite there. But the closer we get to 405, the lower the value for this option, which means that I can take more profits out of it. So if we do end up coming to 405 by today, that would be nice to get out of this trade. But right now it looks like QQQ is still getting some supports at around 313. Looks like we bounced on 313.25 as of right now. And then the Dow is down only 0.2% versus QQQ down 1.4%. Delta is actually up by 1% this morning, and Citigroup is up by 1.3%. So the two of the three earnings plays are up today, and then the UNH, United Health Group, is down by 0.65. Not really much change. But all of these are later in the week for earnings. I'll probably maybe trade one of them before the CPI report. I think that Citi would probably move the most on the CPI report. And then Delta Airlines would be second, and then UNH would probably be third in the move that they make after CPI is released on Wednesday. So I'll probably trade Citi before CPI, and then United and Delta after. My guess, though, CPI is expected to be pretty low. Let's see. Economic calendar for this week. CPI is expected to come in at, I think, 5.2% year over year. Yeah, 5.2%. Last reading in February was 6%, so that would be another steep drop in CPI, which means that the Fed can, kind of ease up on the interest rates a bit, which would probably actually end up in Citigroup going up after CPI. But I do think that Citigroup and a lot of the banks probably going to have a pretty rough earnings season. I think that home lending, home sales have definitely slowed down compared to especially like the last year back in 2022 when people were buying homes in the early year like crazy. So I think that Citigroup, Bank of America, all the big banks are going to have a pretty rough earnings season and probably come down. The reason why I chose Citi, though, I think that it's trading probably the highest compared to its peers. So if you look at like Bank of America relative to the past year, Bank of America is down a lot more. It's at 38 RSI versus Citigroup currently at 49 RSI. And then say Wells Fargo is trading at 43, but definitely in the lower part of where it's been in the past year. So I think that there's a decent opportunity to go short in Citi versus all of its peers. I think that could drop a bit more given how high it's already trading ahead of their earnings report. And if y'all didn't see my video yesterday, I already gave my price targets as to where I think it could go depending on how their earnings shakes out. Let's see. April 10th. I actually wrote it on 4/8. But if they end up beating their earnings, which is expected at 167, and they beat their revenue, I expect their stock to be above 47. If they beat on earnings, miss on revenue, I expect it to be above 45. If they miss on earnings, beat on revenue, I expect it to be above 44. And then miss earnings, miss revenue, below 43. I'd say probably the most likely scenario will be a miss on earnings. Actually, no, I think it's going to miss on revenue. Earnings, I'm not too sure for, though. So either you'll see the stock stay in above 45 if they beat earnings, or below 43 if they miss. Let's look at their past. 167 is what's expected. They did 110 as of last quarter, 202 a year ago, and 214 for the past 2 years. So 202 a year ago would mean that their earnings per share is dropped by, let's see, 202, 167. That'd be a 17% drop in their earnings per share. I'd say it's reasonable, but they could end up meeting or beating on the revenue, or meeting or beating on the earnings per share. So maybe could stay above 45 here. So I'll probably do a put credit spread, assuming above 45. Probably tomorrow or Wednesday, right ahead of the CPI report. Keep getting burned on skew. It's a hard one to trade with that 313 support level on QQQ. It just doesn't seem to want to crack it just yet. It might, it might just need that CPI report in order to break that level. Maybe we don't see a break of it until after the CPI report on Wednesday. It's possible. But we are getting dangerously close to it. 313.51 right now. So keep an eye on it. All right, these are going for 45 apiece. I might be able to get out of these. Let's see, the ask is 48 actually. So I won't be able to get out of them at 45. That's what it's giving me as the price here. But the 409, 408 puts starting to gain a little bit of value with SPY at 406.20. Currently trading at 80 cents. I bought them at 44. I think it might be worth it to just hold unless QQQ ends up rallying off of that 313 level, similar to what we saw Friday. Get a little bit more value out of these. I bought 9 of them, so still have another like $180 that I can make for this trade versus the $300 that I've made so far. So still a decent profit yet to gain if SPY stays below 408 today. The spread on these is pretty wide. 75 cents and 84 cents for the bid-ask spread. Ugh. That's really horrible. Let's see if I can find a better bid-ask spread for Aries. SPY. SPY's traded so much, you shouldn't see a 5-cent bid-ask spread, even if it is out of the money, or in the money, I guess. Let's see, I chose 409, 408. And Aries is quoting me for 78 cents and 81 cents. So still a pretty decently wide bid-ask spread, even on Aries. But a lot better than what you're seeing for Robinhood as of right now. But yeah, seems like we bounced again close to that 313 level, so we might not end up breaking it today. It might be Wednesday after the CPI before we see below 313 for QQQ. And bounced twice at that, looks like 313.30 or so. So anytime it gets close to 313, it just bounces up from it. All right, these are going for 75 now. Yeah. Looks like we won't see 313 for QQQ today. So I'll get out of these while I'm ahead at 73 maybe. Hopefully I can get 75 for them. But it doesn't look too promising. Pulling up to that 314 mark for QQQ, which will be a resistance here. But the 10-year is just rallying like hell, up 4%. You never see the 10-year moving 4% in a day, but I guess we did get the 3-day weekend, so a little bit more volatility than usual with more time passing. But IWM is just hanging up there. QQQ is staying at that 313 to 314 level. Gold is finally below 185. So looks like we might start to get a decent opportunity for going long gold. Obviously, the CPI report could pose some risk there. If the inflation comes in worse than expected, you're going to see a rise in the dollar, which means a drop in the price of gold. So maybe it's selling off in anticipation of CPI coming in worse than expected on Wednesday. All right, these are going for 77 now, so I might be able to get out. Keep getting a burn on skew. Good morning, Guile. Welcome. The Dow is now making its way to the positive. So yeah, everything seems to be turning around. This seems like a very similar day to what we saw on Friday, so we'll just get out of these spreads. Going for 73, 74, 75. Hopefully I can get out at 75. I have 9 of them that I'll close at 75, hopefully. AUT, let's see. Let me raise my price since I have to do this. Two-factor authentication. I always like to set the price a little bit higher, just in case it does get filled. I'd rather get filled at a higher price, obviously. make more profit. No. What the heck? Why do I need to... Should be logged in already. It's odd. 461, 151. Huh. Alright. Yeah, it didn't get filled on that, obviously, since I put the price up there. The bid is 73 now. I think I can get out at 75. If I give it a little bit of time here. Which would be about 290 in profit. Huh, this is new. They ended up adding this bid-ask spread to whenever you place an order. It's a nice addition. But yeah, Dow is positive now. IWM is above 175. So I wouldn't be too surprised if we see QQQ getting a rally now after it came back down to 313 again and retesting it. Unless the rest of the market ends up tanking, but doesn't seem to be the case after this morning's the pre-market drop. Seems like everybody wanted to buy the dip up. Dow is back to 335, so that's just been trading in that 333 to 335 range, not really breaking out of it by much. Well, I guess that means for the Iron Condor, unfortunately, we won't be able to ride SPY down to 405 today and close out of that. QQQ is still having a hard time passing up 314 though. IWM slipped back below 175 again. Still got this order in at 75, hasn't got filled. The bid is at 70, 65 now. So still waiting on her. If you expect Qs to go up today, now you're paying 42 cents for a 315, 314 call debit spread. So if you expect something similar to what we saw on Thursday, that would definitely end up in the money. Might have to adjust this order now. Now the bid is at 71 instead of 75. Hate having to negotiate down, but well, it's trading above 314. Doesn't look too promising. All right, we're talking 72 at the bid now. And now QQQ is pulling back to 314. So this should get filled, hopefully. Yeah. I'll try to replace it. $73 for the bid, 69. It's just moving way too much. Way too much to get out. Probably just not seeing a lot of volume for it since it's a couple dollars out of the money. That 409 put probably isn't getting traded a whole lot. It's my guess. Which makes it harder to get out of this trade. Unfortunately. Alright. Probably have to lower my price to 70 unless we end up pulling back for QQQ, but that doesn't look too promising. Alright, I'll try to close them at 70 now. There we go. Finally got filled at 70. I opened them at 44. 9 of them at 44. Closed them at 70 apiece. Put this over in the Discord. I'll probably keep holding on to the Iron Condor for a SPY. If we do end up dropping, that'll take some profits there. All right, closing options alerts. Premium just took profits on the SPY. Put debit spread expiring today at 70 each. Strike prices were 408, 409. $408, $409. And I originally picked 9 of them up at 43. Originally opened 9 at 83 for a total of 396. And I closed for a total of 630. 630 minus 396. 234 in profit there. All right. Yeah, this is looking very similar to what we saw Thursday, so we could end up going about 315 for QQQ. Right now it's at 314.50, so it's already getting pretty close. You're looking at 50 cents for the ask on a call debit spread, assuming that QQQ will be above 315, which is pretty high, but if this does end up playing out like Thursday did, that was a, let's see, $5 rally after hitting 313. I think 315.50 could be pretty reasonable to expect for QQQ to be above by the end of the day, if that is the support today at 313 and 314. I would want a little bit more confirmation of being bullish, though. Waiting on like 50 on the RSI first, which on Thursday we ended up rallying above 50 RSI very quickly. This time doesn't seem to be nearly as quick. Looks like the Dow just went back to negative 0.04%. IWM is still above 175, though. If you take the opposite direction and QQQ falls below 313 again later today, you're only paying 39 cents. So if the bearish price action continues, that could be a good trade. I just wouldn't put probably put a lot of money on that. But that is pretty cheap, I would say. 41 cents versus paying 50 cents to assume that it'll be above 315. So assuming that it's going to go down $1 is cheaper than assuming that it's going to go up $1, which has usually been the case for the past couple of weeks since implied volatility has been so low with the VIX below 20 right now. All of the bearish trades tend to be cheaper, and if you want a better risk reward, I would say iron condors, bullish iron condors would probably be your best bet. But yeah, it looks like everything's pulling right on back. Of course, after I close out of my bearish position for SPY. .41. Let's move this over so we can see the candle a little bit better. Everything's looking bullish though right now with that 314 level that it just bounced on right now. But I think if we slip below if we slip below the 314 again, could spell trouble for us, but I still think that it's going to take a little bit more to get us below the 313, so I probably won't take that trade today. I think that it's going to take at least a CPI report coming in worse than expected in order to send us below 313. So if we set our expiration date for the 12th, assuming QQQ below 313, now you're paying 45 cents instead of 40 cents for today's expiration date. All right. I think I'll open that. So put debit spread assuming QQQ below 313 after CPI releasing on 4/12, April 12th, expiration for the option. And I did get filled for it right away at 45. Might look for some bullish trades to hedge for the end of the week or for the end of the day. Just seeing where we're trading at. Again, using the strategy I showed at the beginning of this live session, using an at the money put credit spread and then selling a higher call credit spread, like 1% above where it's trading. That was supposed to be 43. Not 83. New options alert. All right. This is going to be a swing trade, most likely, unless we do end up dropping today. Just opened a new QQQ put debit spread expiring 4/12, 45 a piece. Assuming Q is below 313 by then. Could hedge it with even a put credit spread assuming above 313 before. So tomorrow's expiration, assuming it's going to stay above 313, could be a good hedge for that. Depending on how much it pays. For April 11th expiration, you're getting paid 30 cents in credit. You could do that and then add a call to it. Call credit spread, assuming that it won't go up like 1% or more, which will put it below about 317 as of right now. And that's paying you 51 cents, so that's actually pretty good. I'm getting it 53 cents, 54 cents now, and risking 46. So better than a 1-to-1 risk-reward ratio. All right, we're coming back to the 314 level again here. Surprisingly, the bid is actually dropping with QQQ coming below 314. You would have expected the opposite for the bid to go up. The closer we get to 313, the more you should get paid for it. What brokerage am I using? This is Thinkorswim here, and then I use Robinhood to fill my orders, which isn't the best whenever it comes to getting filled at the best price. So probably wouldn't recommend. If anything, I would probably do Aries if I had enough money in the account. I would prefer to use them for better fills, faster fills, and better prices. But now SPY's coming down. These are going for 45 cents. I might just have to close them tomorrow. I could end up closing them today. Let's see, I've got 8 of them that I opened at 57 cents a pop. I'm really just waiting on that 313 level though for QQQ. Seeing if we crack it or not. I don't see a reason to end up breaking the 313 level, but it's always possible. What's really interesting about the jobs report, or the unemployment rate coming in at 3.5%, is that the total number of unemployed people, according to the continuing jobless claims, went up 10%. So the unemployment rate should have been like 3.9 or 4%. But you always get these revisions like a month later. So I think that they're probably just manipulating the data a bit so they can continue to raise the rates probably. And then for the April meeting, I think that we're probably going to get like a 4% reading for the unemployment rate, just based on what you're seeing for the continuing jobless claims, up more than 10% from the previous month. Hot dog. Does Ameritrade on Thinkorswim not give good fills? No, not really. They give just about the same fill that you'll get for Robinhood, and you still have to pay the 65-cent commission. So I don't think that Thinkorswim is any better. I mean, the only benefit to using Thinkorswim as your main broker is just the charts. But I mean, you can make, like I do, I make my trades on Robinhood, but do the charts on Thinkorswim just because of the versatility of the charts here. The detail is a little bit more. All right. Well, doesn't look like we got much going on now. Looks like the markets are kind of chilling out with QQQ at that 314 level, so we might not get much more trading action here. Let's see. Let me type in my closing trade for today. Should bring me to positive for April now. Well, I opened this on 4.6, I think. Let me double check. New options alert. Yeah, 4.6. Closed it today. SPY put debit spread. Whoops. SPY put debit, which is a bearish strategy, expiring today. I bought the 409, sold the 408, 9 of them for 43 cents. Closed them at 70 for 243 profit. Let's see if I have any other trades that I haven't logged. New options alert. Whoop. If I can spell it. The QQQ trade that I opened just now. I think I already did that one. The 4-6 SPY put debit spread, assuming under 407, which ended up being L. And then we'll type in today's trade. Oop. Don't want no ellipses. Come on now. SPY, actually it's QQQ. Put debit, another bearish trade, expiring 412 at 45 cents. Assuming below 313, so I bought the 314, sold the 313. 9 of them at 45. And then probably at the end of the day, I'll look for a bullish iron condor. But that's all the trades I got for y'all this morning. So I will catch y'all tomorrow at 9:30. See everybody.